You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. And now, get ready to hit the Option Block.
All right, everybody. That rockin' tune means it is time to rock out once again with the Option Block, your favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from this fine network upon which you're listening to this program right now. And if you're saying to yourself, you know, I've been hearing that music for a little bit now. When did I first hear that music? Well, ask yourself this. What were you doing all the way back on September 16th, 2010? Because I know what I was doing. I was posting the sneak peek episode of what would become one of the longest running programs on our network. It would become an epic options program, I know, a stalwart, a regular in the rotation for a lot of you out there. Yes, that's when we've posted the first episode of this fine program, the Option Block, all the way through to where we are today, episode 900. It's hard to say that with a straight face sometimes. Listen, yes, 900 episodes of this fine program. So I encourage you, if you want to have a little bit of fun, go back. Probably the easiest way to do it is going to our website, hit the Option Block show page, scroll down to those early shows. The premiere episode was actually on October 8th of 2010, so a few weeks later. We put a sneak peek up for you guys earlier than that in September. Go back and check out those early episodes. You can see how much is different and also how much is not different, not much is the same. All these years later, the meatball's still having some connectivity issues and all the other fun stuff that was usually the case on an episode of the Option Block that you have come to know and love. So a lot has been happening. Let's go around the horn and see who's joining me on this 900th episode spectacular. First off, let's go out to a quiet, a sleepy, a tranquil hamlet known as St. Charles, where we are joined once again by Uncle Mike TOSAW from Know Your Options, Inc. Oh, wait, no. He's from St. Charles Wealth Advisors. Uncle Mike, welcome back to the program. What were you doing back on September 16th of 2010, sir? Can you recall?
I'm actually going to give my old intro call line from back at that time, so you're going to see how far we've come since then. You ready for this, Mark?
Go for it. I'm all ears, sir.
Ladies and gentlemen, boys and girls, I am broadcasting live from the option trading capital of the world, Chicago, Illinois, home of the Bulls and the Bears, and I am not talking about the sports teams. Let's get ready for another show.
Look at you, feeling festive, remembering back to the good old days there of all things.
I can't say it anymore because I broadcast from St. Charles, but it did kind of feel good to say, I have to admit.
Much has changed with the world since then. We've all pretty much had children since then. They've all grown up substantially since those days as well. People have changed a little bit. We've added a few folks into the regular rotation, like the rockingest of lobsters and a few others. We've had a lot of firms join us on the program over that extended run, but it all started, as you remember, listeners, way back in the primordial ooze days with Options Express. That's how this show started. And they are also responsible for saddling me with my other cohort here. They said, have you heard of this tinny voice guy who does this thing called the Option Pit? Maybe he should be on the show with us. And I remember thinking, who the heck is this greasy meatball guy? He wasn't the greasy meatball yet. That would come later. But that was the beginning of what would be the ongoing dance that is the greasy meatball, a.k.a. Mr. Mark Sebastian. Still coming at you from Option Pit. He's added Carmen Line, and he's going to be adding Texas soon to his list of things he's been doing since then. Mr. Meatball, welcome back to the program on this 900th episode spectacular. Do you recall what you were doing all the way back on September 16th of 2010, sir?
September 16th, 2010 was a great day for me. I woke up, my son was 9 months old at the time, I believe. And so, I took him for a walk, took the dog for a walk, then went to work, did the show. Actually, the show was kind of the last thing because we used to record after the close. So the show was the last thing I did for the day. And then I went home. I stopped. I picked up a bottle of wine. The wife and I had a nice little celebratory dinner. I think I made some steak. We had a bottle of red. And then she and I we watched a little Bravo Real Housewives, went to bed, and prepared for another day. It was a great day for me.
Impressive degree of recall there, sir. I'm very impressed. I don't remember that day to that degree of specificity. And, of course, we've had a lot of great people joining us in the hot seat over the years. Quite a few standouts. We've had folks like Mr. Grigas and the Viceroy from OB. We've had others from a variety of other firms joining us over the years. Some memorable, some less so. I'll let you leave that up to the listeners' recommendations, which ones they enjoyed and the most. And now, of course, joining us in the new incarnation of the hot seat. It's the TradeStation hot seat these days. We're joined once again by the educational content strategist over there, Mr. Andrew Rocco. Andrew, a.k.a. Andrew 2.0. He's already got a nickname. I like it. Mr. Andrew, do you recall what you were doing back on September 16th of 2010? Be specific, sir.
Hey, Mark. Yeah. First, I want to congratulate you on the big milestone. That's super impressive. And yes, I was probably drinking some beer in my dorm room at University of Miami. I mean, studying at University of Miami. That's what I was doing. I was studying at the University of Miami.
Wait, did you go to – so I have a question. You went to University of Miami in Ohio?
Nope, Florida.
Oh, you're a hurricane. Nice. Yep. Even better.
Of course.
Even better. So that's a fun
all
spot.
About the U.
Yeah.
Always about the U.
You had more fun that day than I did. Let's put it that way.
Isn't every day a party over there at the University of Miami out there? All right, now that we've established where we all were, we were doing the shows, Andrew 2.0 was horribly drunk as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
I had thought about it before the show. I would have gone back and saw where the levels were back in September 16th of 2010 for all of these various indices. Unfortunately, got to keep on rolling with the actual show here. Going to mix up the format a little bit, though, today. We're going to get you guys featured a lot more on this 900th episode spectacular. After all, it is all thanks to you guys that we are still doing this all these years and all these episodes later. You guys are the backbone of everything we do. So on these big anniversaries, we like to turn that spotlight back on you folks. But on the spotlight on the market today, another interesting one. You know, we're seeing another one of these weird kind of trifurcated days, if you will. Actually, a little bit different now even than that. This was before On the open, we're seeing a drift. People are concerned. We're seeing guys like Paul Tudor Jones crying. Others saying this could be the worst thing ever. Others saying maybe we're poised for some sort of recovery. We're seeing the states starting to take cautious steps towards reopening with all the issues that could cause. We're seeing this will they, won't they trade war redux with China, maybe on the back burner a little bit now. So all of that may be conspiring. The markets were mixed earlier today. Actually, it's like the Dow just ticked up. So as we're speaking now, it is pretty much all green on the screen. If you call 0.01% in the Dow green. Nevertheless, it qualifies as green. The S&P up about 30%. NASDAQ feeling the love, up nearly a full percent, threatening to get back to those all-time highs. Very soon. Uncle Mike's going to be saying his thing pretty soon. And that to me is just really crazy, given all the other madness we have afoot out there. Gold and crude taking a bit of a break. And our old friend VIX Cash also taking a bit of a break, hovering right around a 27.5. That puts it down about 3.5 handles from where it was at this time last show. The VVIX, aka the vol of vol, moving a little bit. It's actually up about 3 points, up to about 119. So still hovering around that 120 level out there. Old friend, famous Dave, likes to track the activity out there and some of these products that may contribute to that. We'll get to that maybe a little bit later in the old mail block. He sent in some ideas along those lines. And the old friend, the VXX, aka the product that doesn't like itself, a little bit of contango in the VIX futures, which in turn a lot of you do like because it gives you that nice juicy erosion. It's delivering what you guys are looking for these days. It's down to about 34. It puts it down about 3.5 points from where it was this time last show. Let's go around the horn again, back the opposite of the way we came. So let's start in the TradeStation hot seat yet again. Mr. Andrew 2.0. While you're busy sunning yourself out there in sunny Florida, sir, what are the TradeStation folks up to? What are they lighting up these days in this? It's kind of weird, kind of cautious start to the week, sir.
Yeah, so what we're seeing is kind of a return to what our clients are normally trading. There were a lot of reversion to the mean value type trades going on that we normally don't see among our clients. Now it's switched back to SPY, Tesla, Apple, Amazon, QQQ, Netflix. So it looks like we've transitioned back to the popular growth names. Far and away, the NASDAQ is, of course, leading. IWM's had its moments, but the NASDAQ's above all of its key moving averages. As you mentioned, it's knocking on the door of all-time highs. So these stocks are, of course, in play at the moment. So for a few weeks there was some value and mean reversion. Now we're seeing some growth in the mix.
Interesting stuff out there. Yeah, NASDAQ, you're right, lighting it up out there. Not surprising. Some folks would be looking for a little bit of action on that side of the fence. Let's go back to the land of the pit, to the greasiest of meatballs. I'll have to go back and see when he earned that moniker in the show there as well. Mr. Greasiest of Meatballs, sir, what are the mad crew, the crazies, as I like to call them with love? What are the crazies up to in the land of the pit these days, and what is lighting up your tape?
I decided it'd be fun to go back and look and see what was happening on September 16th of 2010.
Awesome, because I came woefully unprepared, sir.
The SPY, where do you guys think the SPY was trading?
Oh, that's going to be terrifying. I almost don't even want to say it out loud because it's going to make me sad.
It closed 178.
I was going to say like 170 something.
113.05.
Oh, wow. Okay.
Not at 170, wow. So 113.05. So it's barely over 1,000. So
dang.
Here are some interesting stock prices. Intel closed $19. Oracle closed $25. You know what we talked about that day, I can say without a doubt, Cisco Systems closed $21.93. Microsoft $25.13. Let's see. Apple Inc. a crazy $276.57. About where it is now. Oh wait, there was a split in between. 6 for 1. Or was it 6 for 1 or 4 for 1? So it was some crazy one. We got a whole
7 for 1.
Yeah. So the big news for the day, you had. There was China was trying to move in on U.S. steel, which got blocked. 3 women claimed bias against Goldman. Post-Lehman, massive arbitrage trades in treasuries was discussed. There was a setback for Bill Ackman in his Stuyvesant Town bid. And I think the the what I like was Wilbur Ross was trying to join Cardinal Health to buy Irish EBS, which I believe, and the WTO came out against Boeing for improper subsidies. Kind of some interesting stuff. Here's some fun stuff. We can talk about exchange rates. So a dollar was worth, think about this, the dollar was worth 85 yen. So the dollar was worth 1.026 Canadian. The yuan was still 6.725. Good job, China.
Amazing how they managed that.
Yeah, crazy, right? And then the euro did not, I'm looking, there's not even a euro exchange rate against the dollar at this point because it didn't trade because the euro was so new. So pretty fascinating stuff. The pound sterling was trading up, but so really just a fascinating day altogether. As I look, I don't see a lot of names that aren't significantly higher. Here's a name that's lower. There was a ticker symbol HPQ that was $40.35.
How the mighty have changed.
ExxonMobil was about $61. Let's see. Anybody else? I think that's about it. Let's see. Any other big ones we want to look at? Let me throw out the NASDAQ. You want the NDX or the Dow? We do the NDX. The NDX was, let's see. It was, so it closed, the NDX closed 1,948. So that was that. And the Dow, the DJX, if you will, which today stands at 24,336, was, you're really not that far off the low, believe it or not. The Dow closed 10,595. So it's essentially doubled since then. So there you have it, folks. All of the exciting things from 900 episodes. I can't wait, but now here's my challenge to you guys. What should we do for our 1,000th episode in 100 episodes, which takes place almost exactly a year from now? We'll be celebrating our 1,000th episode.
We'll be celebrating a vaccine, of course, which we already have had for many months in this pandemic. Social distancing will be a thing of the past, so we can do a live show together again. That'd be fun.
Oh, that'll be fun. Yeah, so Mike, I would plan on, I know it takes you a while to figure out when to leave St. Charles, but I would plan on sometime around late, right after Memorial Day, you're going to need to come to Chicago.
Yeah, get the Weather Shield scheduled to come down ahead of time so you can come down.
Yeah, exactly.
Maybe take the boat down, ride the boat down. How about that? There we go. We do a live boat episode on the Chicago River. How about that?
Now, final piece of and then I'll leave 2016 as is. The number one song, the number one movie was The Social Network, and the number one song was Teenage Dream. And the U.S. president was Barack Obama.
It's kind of funny. You're mentioning those numbers and those levels out there. It's kind of sad. Like I meant, it's kind of like the reverse of, go back and watch an old movie like Startup.com and seeing while they're talking there and the tickers going by on CNBC in the bottom. It's the reverse of that because that movie, they were all exponentially higher as before the dot-com crash, obviously. So you see names like Sun Microsystem and all these others trading at orders of magnitude higher than where they are right now. And that kind of brings a tear to your eye for a different reason. Now we're looking at the others and how the mighty have rallied and also how a lot of the mighty we keep talking about are still very similar to back in 2010. We were talking about Apple back then. We talk about them now. In fact, spoiler alert, they're going to dominate our most actives in a few minutes out there. And also, China trade issues with the U.S. also hot on the news as it is right now. Obviously, no pandemic ban back then, thankfully. So a few things have changed, but a lot of what we talk about is still the same, which is kind of fascinating in a weird way. Uncle Mike, sir, I will go back to you now, sir. Do you have any interesting nuggets from September 16th of 2010 you want to share? And also, what is lighting up your tape today, sir?
Well, for you Chicago people out there, who is the Chicago Bears starting quarterback in 2010? Does anybody know?
Was that before Cutler?
I'm going to say Jim Miller would be my bet.
When did Cutler start?
It was Jay Cutler. He came in and it was a time of hope for Chicago. They had this all-pro quarterback from Denver coming in that was going to take the Bears to the next level. Finally, we have the quarterback that's going to take us. But
Chicago, the great quarterback mecca of the world, Chicago.
Yeah, but it was still the tradition of taking a good quarterback and making him not quite as good. But
yeah, Mike, you missed my great analogy on Friday about what's going on with this market.
What's that?
So, one of the things I've been commenting on is how top-heavy it is, in that you now have 5 stocks that make up 20% of the S&P, 5 stocks that make up half of the NASDAQ. I said it's kind of like if you got into a tug-of-war, if Mike TOSAW got into a tug-of-war with a Pee Wee football team. The starting offensive line for a Pee Wee football team, you're big enough and strong enough to kind of drag them along, right? But if you let go, that rope is going to go flying the other direction. And that is kind of what this market feels like with Apple, Amazon, Facebook, Google, and Microsoft pulling everything higher. And, if the big bad offensive lineman lets go, that Pee Wee football team is going to rip that rope, and the whole thing's going to fall down. That's kind of the way I view the market right now.
That is the most unique and flattering analogy I've ever heard. Thank you.
I thought you'd like that one.
It's very good. Thank you. So,
stop beating up those 10-year-olds, Uncle Mike.
Well, you've seen some of the 10-year-old teams that my son had to play on, but that's another story. Anyway, so within a lot of them were good, though. There was just a couple of them that weren't so good. Anyway, I digress. So, now that we've gotten through the fact that Jay Cutler was the hope of the future for the Bears back then, he's doing pretty well now. He seems like he's sheltering a lot of his money from his wife that's trying to bleed him dry. So good for him on that, or his ex-wife. But moving onward, in terms of the markets today, I agree with Mark in that a lot of this is being very tech-driven for what's holding us up like we are right now. In that if you look at financials like XLF, for example, XLF is still pretty significantly off of its highs. So in other words, XLF was at around 31 at the peak a couple months ago. It's still down in the low 20s at this point in time. So a lot of the comeback that the market has been from the techs. And it would make sense because of the fact that you're still going to order Amazon in this marketplace. You're still going to perhaps do things with Apple in this marketplace. You're still going to go on Facebook in this marketplace. Now, granted, there's some things that have been happening and that people aren't probably going to buy as many ads through Facebook or Google in a time like this as they were before, but companies like that are going to survive. So that is what's happening a lot. The other thing that we need to just keep an eye on, pharmaceuticals or IBB or biotechs, whatever way you want to go with that, they're up another almost $5 on the day today, up to the 133 level. And so I think it's important that we keep an eye on that. So in other words, if you are looking to try to pick the company that's going to come up with a vaccine, I mean, you might, it's good luck, but let's say that you think someone's going to come up with a vaccine or a cure and you want to be a part of that when it happens, but you're not quite sure who. Well, IBB might be something to look at. IBB does have options on it, and things are okay with that. And let's say that you're of the school of thought that we're not going to need a vaccine and that this is going to help itself or whatever. You can you can trade, buy puts on IBB. You can be bearish on it if that's what you'd like to do. So that's another thing that's lighting up my tape that I'm keeping an eye on as well right now. So final thing I'd like to mention is that we are as of right now, we're above the 60% bearish retracement level on the SPX. So in other words, if you were to look at where the peak of the S&P 500 was back in mid to late February 19th, I believe is when the day was, and then the low of this market on March 23rd, we're about 60% above where we were. We're about at a 60% retracement level. So we've taken back roughly 60% of what we've lost from peak to trough. And so that's a good thing for us bulls out there. And I think the next level is the 3,000 level or the 300 level in SPY, whatever way you're going to look at it. And really hoping we can get above that 320 mark in SPY because I want to do me some short-term trading again this year.
Let's see what was trading back on September 16th of 2010. Mr. Meatball gave us a lot of nuggets. One of the one we left out there was our old friend, the VIX Cash. Let's see where it was back on September 16th of 2010. It opened at 22.65, and then it got as high as nearly 22.83, and then it closed at 21.72. So you might be saying to yourself, that isn't that far away from where we are right now, which is right around a 27 and a half or so out there. And you would be correct. That isn't that different. But then again, think back to those nuggets that the Meatball was just mentioning about where the S&P was back then and how even a somewhat close number in the VIX, what that means is a very different thing than fast-forwarding nearly a decade here and where we are in the S today at a similar S&P number. Remember, VIX has a context to it, and you have to break down that context. Let's put the context around what's going on today out here, see what the market is actually sinking its teeth into. As of a few minutes ago, we saw VIX doing decent paper at about not quite 200,000 contracts, about $194. So the ADV just a little bit north of 300,000 right now, about 314. SPY at closing in about 2.5 million contracts. The ADV 4.71, so that's come off quite a bit from the highs. The S at 624,000 contracts a few minutes ago. The ADV just north of 1.1 million, so it was well over 2 not too long ago. So the S feeling some of this volume coming in, of course, from just the general lower levels of volatility, but also perhaps also feeling some of the impact of the loss of some of those more complex transactions it likes to do on the floor, which is why SIBO's saying we're going to get back to the floor as soon as we can. The Qs, 391, the ADV, about 750,000, right around 750,000, and the IWM at about exactly 250,000 contracts. The ADV, 680 out there, so the IWM has been lighting it up. Let's see what our top 10 is today compared to back, 900 episodes ago. Number 10 is Disney. I don't think we were talking much Disney back then. Much less exciting name than it was back then. Almost 10 years ago, you're talking, it was just early. I don't think, maybe they had just acquired Marvel, or maybe that was still on the radar for them coming up. So, actually, I don't think they had yet. So they definitely hadn't acquired Star Wars and Lucasfilm. And they certainly probably hadn't acquired Marvel yet. So a very different beast. Certainly no Disney Plus. It was mostly Parks and Princesses back then, a little ESPN and ABC thrown in as well. So much different, maybe much less exciting, certainly much less monolithic beast than it is today. Disney at 140,000 contracts is tied actually with number 9, NVIDIA. Haven't seen them in the top 10 in a while at 140,000 there as well. Number 8, Baba, also breaking into the top 10 for the first time in a while at 143,000 contracts. Number 7, Bank of America, $156, not with its friend across the street there, but it's next to another BA name. I wonder why that is always the case for Bank of America. Number 6, American Airlines, $162 on the tape. There are a lot of headlines of them, people tweeting out photos of full flights, which I think took a lot of people by surprise. Number 5, Microsoft, $188,000. Number 4, AMC. Interesting. They've been in the headlines recently a lot for a lot of the wrong reasons. There are 195,000 contracts there as well. Number 3, Tesla. Day that ends in Y. Got to talk a little Tesla, 235,000. Musk making the rounds again. Maybe he should dial that back a little bit, but either way, 235,000 contracts on the tape. Numero dos there, AMD back in the top 10, and all the way up to number 2, 276,000 contracts. That means number 1 is the same it probably was back on September 16th of 2010. Apple, 443,000 contracts. Wasn't doing as much paper back then, but still, it was probably dominating your tapes back then as well. Let's look really quickly. We got some earnings popping off. We had Marriott, Under Armour before the bell today, Logitech after the bell. Later on this week, we've got Honda, Casper, and Duke Energy on Tuesday. Wednesday, Uncle Mike's old favorite. It was his favorite a decade ago, and it's still his favorite, Cisco, as well as Sony. Thursday, we got AMAT and Denny's. You want to know what's going on in the breakfast world? There you go. And Friday, DraftKings. That'll be an interesting one as well. Check out the reports over there, theoptionsinsider.com. Now we got to get to you guys. Before we do that, we're going to do a quick stop in the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
right, everybody, welcome to the Odd Block. This is usually the portion of the show where we unleash our Eye of Sauron upon the market, but sometimes we like to mix things up. We're going to mix it up again today. We're going to head back out to the TradeStation hot seat. Mr. Andrew 2.0, sir. I know you've been busy diligently running your scans behind the scenes there to get ready for this moment. So have at us, sir. What is the first name that is coming across your unusual activity radar today, sir?
So I'm seeing a lot of flow in Sarepta, SRPT. This is a bio name. Saw 280 of the November 150 calls for 13.55. I might have mentioned this last time, but I like to watch this one because it's had some really explosive upside moves in the past. You want to take note when a lot of names from one sector begin to show strength. So as they were mentioning before, one such sector right now is definitely biotech. The IBB, for example, is already at 52-week highs, well ahead of the market. So really impressive action. I feel like I haven't heard too many people talking about it, that it's hitting new highs well before the market. So SRPT is an example of a stock really trying to break out on multiple time frames. Right now, it's trying to break out on a quarterly time frame. Just cleared 3-month highs on the monthly chart, forming little inverse head and shoulders on the daily chart. So I prefer when there's multi-time frames setting up along with flow. That's where kind of I've had my best trades. I believe they are presenting some data with Pfizer on the 15th. So, of course, that could potentially move shares. As with all biotech names, one thing I would tell you is if there are potentially big binary moves, it's often best to play through options so you have that premium paid up front.
Yeah, let's look at this one really quickly. Not a name we've talked about previously on the Odd Block today, so that's kind of always a fun one here. Ticker symbol SRPT, listener. This one going back a year ago was trading, $1.12 is trading 134.18 right now, so it was a wee bit lower back then. It bottomed out a couple of times well before the market bottomed out. This one bottomed out back in September at about 72 and change out there, so pretty much half of what it is right now. Then it rallied all the way back up to almost double that, almost 140, and then, of course, it sold off again, the Great Nadir, down to about 82 and change, and now it is back on the rebound up to about 134 and change. Andrew 2.0 mentioned the call activity. Also seeing some other interesting call activity out there. Looks like a size roll. Looks like maybe an overwriter getting caught a little bit and deciding he doesn't want his stock to get called away after all, because it's the May 135s going up 2,700 times against about 2,700 of the June 150s, buying the May, selling the June. So he's rolling that short call out a little bit. He's doing it basically for even money. He's doing it for a dime. He's doing it for $4.10 on the May calls, and the June calls, he's selling them out again for $4. So he's doing that roll from May to June for a whopping dime. Granted, he's getting a lot more room to run on the stock, but we like to see a little bit more juice usually when you're doing a roll like that. So Andrew sounds like someone got caught up in the frenzy and had to now roll himself out of there. So looks like he's concerned about a little bit more upside on SRPT out there as well, which seems to be in keeping with what we're seeing in the stock out there right now. An interesting one. What else you got for us, sir?
So I wanted to bring up one I brought up, I think it was either last week or the week before, which is BYND, BYND. Had a really nice run since then. I want to mention that I've
never heard of it. What do they do? What is this BYND you talk of?
They make delicious fake meat is what they do.
Actually, it is pretty good. Have you had a Beyond Burger?
I haven't. Not my thing. I like actual meat. But I do like trading the stock. But so the open interest is actually near the highs of where it was when it was going on that really big run a year or so ago. So that's just something to watch. It is trying to clear a big quarterly level. There's a ton of room higher if it can kind of break away from there. Another thing I saw using my hot list feature in TradeStation, I saw August 21 1050 calls going off in Tesla for above ask for $2.4 million in premium. We all, of course, saw the tweets from Elon that the stock is overpriced, among, of course, other attention-grabbing tweets. But one thing I would say, the earnings kind of shook out both bears and bulls, gapping higher, and then it really reversed lower. But really, the fact of the matter is we saw an auto company turn a profit during a global pandemic. So I know, at least for me, I'm a big believer that hyper growth stocks cannot be traditionally valued. A lot of people try to put a valuation on a stock like Tesla. I always think back to something like Amazon. If they really have something game-changing, in my opinion, it's hard to value it kind of in a traditional manner. So action retested its breakout zone and the 200 SMA, and then it ripped higher ever since, and it's shown a ton of relative strength. So what I'm watching for a key level is above the 824 high of an inside week that was printed last week. So above that, bulls might be able to push it to that 880 gap fill, and maybe perhaps higher into the thousands.
Yeah, well, they've shown no reticence to bid this thing up outside of the days when Elon's out there talking smack about his own stock. It's at $8.1225 right now, listeners, down about $7 or not even 1% for a crazy name like Tesla out there. Andrew 2.0 just broke down the paper he's seeing. A really quick look here from our Eye of Storm. Looks like the big prints are on the put side today, about almost 3,000, 29.96. Of the May 600 puts going up for $1.10. Someone blasting out about 3,000 of those. It was followed by about 10 minutes later by 1,000 of the May 560 puts. So 10 minutes later, not quite marked spreads. So you can't really intuit that they're the same, but they are interesting paper nonetheless. It'd be an interesting ratio to do if you were doing it. It'd be selling 3 of the 600s against buying 1 of the 560 puts. That's an interesting. Maybe you want to do that the other way around. But hey. Maybe I'm a crazy person. So, yeah, either way, that's probably not related paper, even though it seems like it might be. It's close enough. But still, those are the big prints we're seeing out there in Tesla land. But again, a day that ends in Y, going to have some Tesla headlines out there. Interesting to see that that's lighting it up over there at TradeStation land as well. Now it's time to see what's lighting it up with you guys. It's time for our 900th episode spectacular mail call palooza.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
Did I say mail call? I'm so excited I said the wrong show. This is the Mail Block, of course. Mail call, another show that you guys are mainlining quite a bit right now and liking the return of, a.k.a. Options Bootcamp. But let's get to this one here, see what you guys have on the brain. First off, a lot of you folks sharing your feelings, giving us a taste of the old feels out here on our question of the week this week, which is kind of a bit of a redux from what we did exactly a month ago. We asked you back a little more than a month ago. Now, back on March 30th, we asked you, hey, the S just passed 2,600. What are you feeling out here? Are you fading this? You liking this rally? And overwhelmingly, more than 2/3 of you said you were fading it. It was a dead cat bounce. Here we are a month and change later, and obviously we are north of that level. And so we asked you, hey, we just passed 2,900 in the S, at least at the time of this poll last week. And we said, what are you, same question, what are you feeling right now? A month from now, where will we be? And it's a little bit of a different story out here this week. You guys still fading it, but not quite as aggressively. Maybe the past becoming a little bit of a prologue, afraid to fade a rally that seems to want to persist in spite of all evidence to the contrary out there. So you're still saying lower, but not quite the more than 2/3 as last time. So far, and we still got a few hours left in the day. So a lot of you have voted, but if you haven't voted yet, get on over to that options. Make your voice heard. Right now, 43.5% to the dark side out there, followed by higher at 26.3%. Right around this level, so not really moving much net on the month. That's about 18.2%. And 12% of you saying I'm still in cash. So that number is about double what it was last time. So understandably, maybe taking some profits off the table here since this V-shaped leg of the recovery. I understand if you would be a little bit spooked at these levels, maybe want to put a little bit in cash for a rainy day. So that level, I think, not exactly surprising. So Mr. Andrew 2.0, let's start with you again. First off, if you have thoughts on this poll, or maybe if you're surprised at any of these numbers, let us know. And then B, what are the TradeStation clients asking us these days, sir?
Yeah, so the numbers don't really surprise me too much. What I would say is there's no other way to really describe this as a lockout rally. Bulls are just basically being rewarded for not overthinking and following the trend. So as a technician, sometimes it really pays not to overthink, to just stick with the trend and then wait for some evidence in terms of price, not news headlines, not rumors, but price to really push you in the direction of your next trade. I've found that to at least help me. But I do have a question here from a client. They're saying, you've talked about relative strength in previous podcasts. What is the best way to look for it? So in TradeStation, there's a ton of tools to sort for relative strength. You have the ability to sort by the entire database if you want. You can break down by industry group, sector, or exchange. But if you're just kind of at your own broker, or you're just starting out now, one of the best ways is you can just look at it with the naked eye. For example, I mentioned biotech, the IBB, which tracks those NASDAQ listed biotech stocks, is at 52-week highs, ahead of the NASDAQ, ahead of the S&P. And it doesn't have to be on a long time frame either. This morning, for example, when the market opened with a gap down, I saw a ton of growth names hit green levels way prior to the market. Names like AMD opened flat, and then as soon as the market started to uptick, names like that really ripped and gained traction off the lows. So it's a really simple concept, but if you can master it, there's a lot of money to be made.
Let's see what our audience wants us to master here out there today. First off, a lot more comments coming in from YouTube. You guys have been subscribing more out there. You're liking it. Hey, more power to you. Have at it. Enjoy it out there. This one's coming from our frequent listener, Scott Somer. Usually he chimes in on Twitter. Now he's chiming in on the old tubes. First off, he says, thank you for adding this way to listen to your programming. Well, you're welcome, Scott, and everyone else out there who's enjoying the old tubes. It's been active for years. We just never really talked about it because we didn't think you guys wanted your podcast that way. But lo and behold, you do, and a lot more of you do. So we're happy to provide it out there. He has a question as well. He wants to know, well, first off, he mentioned about the pre-market move for the unemployment number out there. Well, thanks for that. That was last week, of course. And then he chimes in with a question. He wants to know if there's been any progress in getting rid of the pattern day trading rule. You know, this is one that a lot of people in our audience on the bleeding edge bump into every now and then. You know, you guys like it. You make your trades. You're slinging. You're getting in and out. You don't think about sometimes like, hey, I'm going to bump up against this. It is unfortunately an issue. I don't know. Let's go to Andrew 2.0. You're kind of our broker representative here. And to your knowledge, sir, has there been any progress on maybe getting rid of this? And is this a frequent complaint you're hearing about from like the active users in TradeStation as well?
Yeah, so unfortunately that is kind of cut and dry across the industry. You need 25 grand maintained in your trading account in order to avoid that. There's really no way around that. I wish there was. So if you're under 25 grand, you might want to, if you're trading options, for example, you're probably better off, with mid to longer term swings or just going with common. Because if you do go over that rule, that pattern day trade rule, they can lock your account. I think it's for like 90 days. I would check on that, but I believe if you do it too many times, they'll lock your account for 90 days. So that's not a TradeStation rule. That's kind of just across the industry.
Yeah, so unfortunately, Scott and everyone else who hates that rule, doesn't sound like there's any changes to that. There's been a lot of regulatory moves behind the scenes to ease things like capital restrictions on large trading firms so they could provide you with tighter markets on there. But unfortunately, I don't think we've seen any big movement on that front. All right, Trader J Flaw 79. I like that handle. What's your flaw? I don't know. We all have flaws. Let's see. He wants to know, with Leap options in the money, do you ever sell front-month options out of the money? So it sounds like he's talking about the old stock substitution play. That's going to be your typically longer term, a.k.a. your Leap option. That's typically going to be in the money. Remember, it's going to be at least probably a 75 delta, which is pretty deep in the money, maybe more, maybe 80. It depends on how you like to structure it. It could get up there from a delta perspective. Do you ever sell front-month options out of the money? Yeah, we talk about that all the time. On this network, on OPR, there's a strategy we talk about called the Fig Leap, which is exactly that. It's something we've talked about a lot here on the network of just trying to, because remember, you still, even though it's less outlay than you're shelling out for the stock to buy us in the money call, it's still going to be a hefty amount. You're paying for a option that is fairly in the money, so you're going to have to pay for that. So you're probably going to want to do some things against it, like selling front-month covered calls or even in the weeklies. Mr. Uncle Mike, I know you like yourself a little bit of stock substitution out there every now and then. Do you like to, as Trader J Flaw 79 likes to know, do you ever sell front-month options out of the money against it, sir? And if so, why? And what's your use case usually?
Yes and no. So I have, but I've been kind of getting away from it over the course of the last 4 or 5 years, just because of the fact that we've had such a bull market that it's difficult to use that specific tool. Not to say that I won't go back to it, but what was happening to me probably up till 4 or 5 years ago is that the concept is very good, and that if you have a low volatility environment, you're locking in lower volatility by buying an option several months out, a year out, whatever, and then you're selling more of a near-term option, and you're not taking on the low volatility in your option sale for as long. You allow for some upside in the market because you're selling at a strike higher than where the market is. And it's the only way that the strategy is really not going to work is if we have significant movement to the downside or significant movement to the upside. And so to the downside, of course, you're risking the premium that you pay for the longer term option. But I felt comfortable with that because I could roll down options. Volatility would go higher if the market would go lower. So that really never concerned me that much. And I also would never do that with a large enough amount of capital to where it would change a client's life if I were doing that, either for myself or my client. But where I was finding trouble is that when the market goes higher that quickly, as it has over the course of the last few years, you're trying to roll up options, you're trying to roll up and out, you're trying to do this, that, and the other, and I can't make that work. So probably about 4 or 5 years ago, what I started doing when I do that strategy is one of two things. I'll still buy the long-term call premium, whether it's in the money or out of the money. I've talked about that on the show numerous times in different markets. So check some of the 900 episodes. There's plenty of content on there of me buying different strikes for different reasons. But the two main things that I've kind of adjusted to through this more recent 5-year span has been just buying the longer term premium, but either selling an additional put spread on a dip, whether it's a couple days or a few weeks, whatever the case may be. And then that serves as the time decay hedge, so to speak. Now, granted, you have to adjust your deltas in that you are taking on more deltas. So you do have more downside risk with that in some way, shape, or form by either buying less calls or whatever way you want to look at it. Or the other thing that I've been doing is selling call spreads. So that way, if we do have a market that is sitting still, I'll sell a near-term call spread, and there won't be any additional maintenance requirement in the account because of the fact that I have the long call. But by selling a more short-term call spread, if we do have a raging bull market higher, you kind of get the best of both worlds in that you're not going to miss out on the market to the upside as much. And it just kind of serves as something that works, I think, better if you have a market that's going to move a lot. Now, if the market's just going to go up a little bit, if God were to tell me that were to happen, then yeah, I think that just selling a single leg option against it works well. But unfortunately, God doesn't tell me what the market's going to do. So I think a way with which to work that is selling a near-term vertical call spread against a longer-term call, because of the fact that when you do that, yes, you're going to miss out on some upside by comparison to just simply buying the long call, but you have something there. So those are kind of the ways with which I've evolved to over the course of the last 5 years with that strategy. Not to say that I won't go back to selling single-leg near-term options against longer-term options, but for the time being, that's kind of more of how I do it and what I like to look at it as.
Thank you, sir. We got a listener, Jassy, here, who's listening live. They say they always sell front-month calls against their long-term leaps, especially during earnings time. So there you go. Uncle Mike, not as much of a fan of it anymore. Jassy, at least. And I know a lot of you out there in the listening audience are big fans of it. Speaking of our listening audience, we've got out here now Ken Tango. I like that handle. A.K.A. the guy usually known as Famous Dave. He's been on our VolViews show. He does his Vol/VIX Crush show out there now on YouTube. Many of you have seen it out there. He's chiming in today. He wanted us to know that a big block traded out in VXX, well, big for VXX, I suppose, about a 500 lot of a risk reversal out there was the Jan 40 call versus the Jan 30 put. Paper doing about 500 times buying call and selling put tied to stock 33.71. They did it for a 45-cent credit. The put was 340. The call was 395. Mr. Meatball, sir, does that float your boat out there? A bullish risk reversal in VXX right now, sir?
I mean, it's a good way of doing stock replacement in a name like VXX, taking in the credit. If you want to take delivery, I think that's a better way of trading VXX than owning the stock, because the stock is, now in a place where it is starting to lose some value on a daily basis. So, that would be what I would say. I like it better than buying the stock outright, for sure.
I like many things better than buying VXX outright in most scenarios. Being lit on fire sometimes is better than owning VXX. That's a conversation for another day. John Cowslip, good handles today. He was talking about something we tweeted out earlier about, I guess, credit card use down quite a bit. He said markets should rise on such news. They're down by the most since 1989 in terms of credit card use, apparently. And he thought that would be bullish news. Well, the markets are rallying, so you're getting what you wanted there, John Cowslip. More YouTube love. This is on our episode 886, so a whopping 14 episodes ago. They chimed in saying, this is a cool video. It was really good, from James. Thank you, James. We love you guys more than you love us. So next up, hashtag. His handle is hashtag. That sounds familiar. I think he's chimed in before as well. I think he's talking about what we talked about with USO in the past and the structure. He says, the big banks do not agree with you. They have changed their outlook and analysts. I think he's talking about when we talked about it recently on the show like a week or so ago about USO, how it's changed its structure. I'm not sure then why he's saying the banks don't agree with us. We didn't give an outlook on whether we think it's better. The stock is better. We just said it's different now. Whether that's better or not is up to you. I think personally, if you want a product that's going to survive in the near term, then you want what USO has been doing, which is getting the hell out of the front month, which is where the madness is in WTI right now, and spreading it out into saner, calmer, more rational contracts. And that's exactly what they've done. In fact, as of this morning, the target weighting of the portfolio in USO is 15% July, 15% August, 15% September, 15% October, 5% November, 25% December, and then 10%, a little dab of June 2021. So as you can see from that, they're already all the way out of June. So folks who are concerned about June going negative for whatever reason, I think the fundamentals are a little bit different out there now than they were last time we saw this rearing its ugly head, but still there are concerns about the June contract. USO is already out of the June contract. And so that, I think we said, that at least I said, that makes me more confident in the survival of this product going forward. So if the banks don't agree with me, then maybe they think it's going on. I'm not sure exactly what you're saying out there, hashtag, but either way, USO, a very different beast than what it was last time. Speaking of zero crude, next, with two X's, wants to know, Andrew 2.0, wants to know, did TradeStation have to make any adjustments to its platform in the wake of the crude plunge below zero? As we all know, that was kind of a crazy time in the market. CME was calling up brokers saying, hey, this thing can go negative. We're going to start listing negative strikes. It was just unprecedented times. I'm curious from your perspective, Andrew, did that crazy inversion of WTI, did that have you guys have to maybe run around and make any tweaks to the platform, any changes, anything stand out to you as Next wants to know, Andrew 2.0?
Yeah, so I'm not the one who makes decisions on that, but I do believe we did some minor tweaks to margin requirements, which turns out was probably a great idea, because if you look at some of the other brokers, they had major problems where people were owing millions of dollars on their account when it went negative and things like that. So I think we did do some minor things in terms of how much margin we're giving for crude. But aside from that, I didn't really hear much on that front.
I'd be surprised if every broker didn't make some tweaks out there. They were unprecedented. Right, we saw names like IB and others taking big hits as a result of perhaps maybe not making those changes. So yeah, those are unprecedented. We still haven't seen all the fallout from that. Hence what I was just talking about earlier about how USO has changed their entirety of their structure. No longer tracks front month WTI. Who would have thought of such things a few months ago? Let's see. We're going to suspend with our Around the Block. We're going to squeeze a few more of you guys in. It is our 900th episode. Spectacular, after all. Let's see. Paul M. Smith, 1975. We were talking about Peloton earnings on the last show and what they did compared to their straddle. He wanted to chime in and say, Peloton is a strong buy. Well, the market seems like it's agreeing with you. It's liking what it's what's been going on out there in Peloton of late. It is up well beyond where they were at their, let's see, where are we here? At their IPO. Oh, about a 44 and change right now. It came out about 25 and change back then. So well north, who would have thought, as I said, I think I said on the show last week, it was an expensive kind of luxury good. And now all of a sudden it's somewhat of a necessity if you want to work out at home. Something like that, you'll need some sort of home equipment. And if you want to pay for the coaching and stuff like that too. So yeah, it's become all of a sudden like the only gym in the country. So, and it doesn't seem like after all this is lifted, social distancing, people are going to be running back to gyms anytime soon and rubbing up all over that equipment that everyone else is using. So sounds like these types of home gym things are going to be in fashion for a while. So yeah, I think a lot of people would agree with you there, Paul M. Smith, that I'm not sure about a strong buy. It has been up quite a bit, but at the very least, it has been a buy of late. Project got good handles today. Project Oracle chiming in. This is about the show we did earlier on the network. This is actually our interview show. I did one about hard assets with the diamond analyst. What the hell is going on in the diamond market right now? People want to have hard assets that they could put in their safety deposit box or hide under their mattress, quite literally. And diamonds fall into that. We were talking about organic diamonds, if you can believe it. And he said, yeah, those are the ones that takes millions of years of pressure to make. Yeah, I was joking on that show that those are quote unquote organic diamonds, but I don't think it's that far from the truth. There's a lot of, they can slap the branding of organic on anything, including something that's been in the ground for millions of years. And apparently they're going to maybe do that in the diamond front as well. Got a little bit of love here. We'll wrap up the show with this. This comes from Dana. Dana says, congrats on your show anniversary. You guys are the good guys in the options world. Been keeping me sane and informed for years. Well, thank you, Dana. We love you guys more than you love us. Trust us. We do this quite literally for you guys out there. We got a couple more. Let's go from Option HQ. He's also chiming in saying, thank God for the Options Insider Radio Network during this lockdown. I need it in my ear holes. That's how you know he's been a listener for a while, because he says he needs it in his air holes. I like that out there. Thank you, Option HQ and Dana and everyone else who chimed in on the anniversary. It is a somewhat auspicious milestone. Don't worry. We'll still be here to celebrate 1,000 in the future and many more to come. Unfortunately, that music means we come to the end of an epic 900-episode spectacular. What a palooza it was. We went all the way around the horn, back to September 16th of 2010, and now back again. And if you're saying to yourself, hey, I need some more. I need more in my air holes, just like, Option HQ? Don't worry. We got you covered if you're listening live. You get a lot of fun stuff in there. In the interim, we'll be back in exactly an hour with some fun guests to break down what's going on in the world of crypto volatility. Guess what? Halving is coming up. Bitcoin's moving and shaking. We'll get to all that in about an hour. We'll pump in some fun stuff in the interim, maybe some boot camps or whatever the heck else we got in store for you guys. We'll see what our friends have in store for us. Let's start in the land of TradeStation. Mr. Andrew 2.0, sir. If folks are intrigued, they're listening, hearing you talk about the scans and the hot lists and all this other fun stuff. They want to kick the tires in TradeStation land for themselves. Where should they go? What should they do?
Yeah, it's going to be tradestation.com/options insider. TradeStation, we offer education for all levels. So if you're just starting or you're a seasoned pro, we're going to have education. We're going to have tools for you. And we do have a special cash offer going on. So once again, that's tradestation.com/options insider. And Mark, thanks for having me on, and congratulations again.
Thank you for joining us on this 900th episode spectacular. And thanks you guys for listening. So if you want to get that cash, head on over to tradestation.com/options inside. We can all use some cash these days. Maybe you want to put your stimulus to work and trade a little options at the same time. Tradestation.com/options insider is the place to go to kick the tires and light the fire. It's a great place to go. See, TradeStation knows you're listening, liking, enjoying what they're doing, and they can come back on for more shows in the future, which is good for everybody. And Mr. Uncle Mike, same question for you, sir. If folks are intrigued, they want to dip their toes in the land of St. Charles, where should they go? What should they do?
If you are looking for a financial advisor who has been at it for over 10 years on the option block, go to stcharleswealth.com and we'd be happy to help you in any way, shape, or form. And then on another note, a very heartfelt thanks to all of you listeners for making this show possible. I have had a lot of fun personally on this show over the course of the last 10 years or 900 episodes. It's always a milestone, and excited for the next 100. And very heartfelt thank you, everybody, for listening to us.
I will second and third and fourth that as well. We do love you guys out there. I'm not sure if he loves you. Let's find out. Mr. Meatball, sir, A, do you love the listeners? And B, if they want to reach out to you and show you their love, where should they go? What should they do?
Well, I'd like to personally thank my personal trainer for working on my back and shoulders so I could carry this show for so long.
Yes.
It really did. Without him, I don't know how this show gets through.
Where would we be without the snark of the meatball 900 episodes later?
No, again, yes. Thank you. Can't wait for show 1000 and keep listening. And yeah, come, I write newsletter, a Vol Edge newsletter on VIX every day. I put out a couple extra kind of more thoughtful blogs every week as well. So come check them out.
There you go. You know where to go by now. You've been doing it for the better part of a decade. OptionPit.com, but a lot of newcomers join the network every day. OptionPit.com is the place to go. So that's a quick rundown. TradeStation.com/OptionsInsider. Kick the tires. Get your cash over there. Then StCharlesWealth.com is the place to go if you want someone to hold your hand in these crazy markets. And then last but not least, if you want to get some education, some webinars, maybe a sweet VIX hat, OptionPit.com is the place to go. And on behalf of the Greasers and Meatballs and Andrew 2.0 and Uncle Mike, we'll have to get Federal Holiday Mike back on just for a fun look back into the rearview mirror as well. He's busy out ranging these days. And of course myself. I want to thank all of you out there for downloading, streaming, subscribing, for sending in so many great questions. Keep them coming. We love hearing from you guys. We know it helps you guys in these crazy times, so we're happy to walk you off the ledge. We'll see you back here in a little bit for the Crypto Rundown, and then back again for a bunch of other shows throughout the week, including OPR and everything else. And we're back again on Thursday for more of The Option.
The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit TradeStation.com/OptionsInsider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.